Welcome back to the channel, traders, investors, and everyone looking to master the most difficult battlefield on Earth, the battlefield of your own mind. Today, we are going to embark on a deep and transformative journey. We are going to unpack, decode, and explore the legendary masterpiece written by Mark Douglas, titled Trading in the Zone. If you have ever found yourself staring at a chart, frozen in fear, unable to pull the trigger on a perfect setup, this video is for you. If you have ever taken a small profit only to watch the market run for hundreds of points without you, or if you have ever moved a stop loss because you could not bear the pain of being wrong, you are in exactly the right place. Grab a notebook, get comfortable, and let us dive into the psychology of consistent success. The paradox of the trading environment. Most of us come to the financial markets looking for freedom. We want financial freedom, time freedom, and the freedom to be our own boss. We are drawn to the idea that we can sit anywhere in the world with a laptop and extract an income from the endless flow of global capital. But Mark Douglas points out a massive paradox right at the beginning of our journey. The very freedom we seek is the exact thing that destroys us. In our normal, everyday lives, we are surrounded by rules, boundaries, and structures. Society tells us what time to wake up. Our bosses tell us what tasks to complete, and our laws tell us what we can and cannot do. We are conditioned from childhood to operate within a rigid framework. But when you open a brokerage account and look at a price chart, all of that structure completely vanishes. The market does not care when you wake up. It does not care if you risk 1% of your account or your entire life savings on a single tick of price movement. The market offers infinite possibilities and absolutely zero rules. Douglas explains that because we are not psychologically equipped to handle infinite freedom, we end up creating our own destruction. Without the external boundaries we are used to, we have to build internal boundaries. We have to create our own rules and, more importantly, we have to enforce them upon ourselves. This is incredibly difficult because human beings naturally want to avoid pain and seek pleasure. When the market moves against us, our lack of internal structure allows us to rationalize, hope, and pray instead of cutting the loss. We realize very quickly that trading is not about conquering the market. It is entirely about conquering ourselves. The illusion of control and the need to be right. One of the most profound concepts Douglas introduces is the reason why smart people often make terrible traders. You would think that doctors, engineers, and lawyers would dominate the financial markets. They are highly educated, analytical, and successful. But their success in the real world is built on a fundamental premise that does not exist in trading: the premise of control. In the physical world, if you study hard, you pass the test. If you engineer a bridge with the correct physics, it stands. You can control the variables to guarantee an outcome. Furthermore, society rewards us for being right and punishes us for being wrong. We are conditioned to associate being wrong with failure, shame, and a loss of status. When these highly intelligent people bring this mindset to the market, it is a recipe for absolute disaster. They analyze the chart, read the economic reports, and draw their conclusions. They take a position, fully expecting the market to validate their hard work and their intelligence. But the market is not a math test. The market is a collective expression of the beliefs of millions of participants. It can do whatever it wants, whenever it wants. When the market moves against the smart trader, their brain registers it as a personal attack. They cannot accept being wrong because their ego is tied to the outcome. So they hold on to the losing trade, convinced that the market will eventually realize how right they are. Douglas teaches us that you must completely divorce your ego from the trade. You have to accept that you have zero control over the market, and that being wrong is simply a statistical reality of the business, not a reflection of your intelligence or your self-worth. Taking absolute responsibility. If you cannot control the market, what can you control? Douglas states that the first true step toward consistency is taking absolute 100% responsibility for everything that happens in your trading account. This sounds simple, but it is incredibly rare. When a trade goes well, we are very quick to take the credit. We pat ourselves on the back for our brilliant analysis. But what happens when a trade goes poorly? We blame the central banks. We blame the algorithm manipulating the price. We blame our broker for a wide spread. We blame some news event that came out of nowhere. Douglas highlights that as long as you are blaming external factors for your losses, you will never achieve consistency. Why? Because if the problem is out there in the market, then you are powerless to fix it. Taking responsibility means accepting that the market owes you absolutely nothing. It does not know you exist, and it certainly does not care about your financial goals. Every single price movement is completely neutral data. It is only your mind that assigns a negative or positive charge to that data. When you take full responsibility, you realize that the only variables you can control are your entry, your stop loss, your position size, and your state of mind. You shift your focus away from trying to force the market to give you money, and instead focus entirely on flawlessly executing your own trading plan. The nature of market data and the avoidance of pain. To truly operate in the zone, we have to understand how our brains process information. Douglas spends a great deal of time explaining the psychological defense mechanisms that sabotage our trading. Human beings are biologically hardwired to avoid pain. If you touch a hot stove, your nervous system remembers that pain, and you will naturally hesitate before ever touching a stove again. Our brains treat emotional pain exactly the same way they treat physical pain. If you took a massive loss on a breakout trade last week, your brain recorded that event as highly traumatic. Now, imagine you are sitting at your desk today, and your trading system flashes another perfect breakout setup. Before you even have time to consciously think about it, your subconscious mind recognizes the pattern. It remembers the pain from last week, and it instantly steps in to protect you. It does this by filtering the market data. Suddenly, you start seeing all the reasons why the trade might fail. You notice a looming resistance, level you would normally ignore. You feel a sense of dread. Your mind is literally blocking you from seeing the opportunity because it is trying to save you from experiencing that pain again. This is why traders freeze. This is why we hesitate. Douglas explains that the market is always generating neutral information. A tick up or a tick down is just a data point. But our fears distort that information. If we are afraid of being wrong, afraid of losing money, afraid of missing out, or afraid of leaving money on the table, we will never see the market objectively. We will only see what our fears allow us to see. Overcoming this requires a fundamental rewiring of how we view risk and reward. The casino paradigm and thinking in probabilities. This brings us to the absolute core of Mark Douglas and his philosophy. The secret to consistent, stress-free trading is learning to think in probabilities. To EXPLAIN. This, Douglas uses the perfect analogy, the casino. Think about how a casino operates. They offer games like roulette, blackjack, and craps. In every single one of these games, the casino has a slight statistical edge over the player. In any given hand of blackjack, anything can happen. A total amateur can sit down, get dealt 21, and take thousands of dollars from the house. Does the casino panic? Do they sweat? Do the managers start tweaking the rules of the game in the middle of the hand because they are afraid of losing? Absolutely not. The casino understands probabilities. They know that while the outcome of an individual hand is completely random and unpredictable, the outcome over thousands of hands is highly predictable and guaranteed to be profitable. They do not care about the micro-level events because they trust their macro-level edge. Douglas demands that traders adopt this exact same mindset. Your trading strategy is your edge. An edge is nothing more than an indication of a higher probability of one thing happening over another. If your strategy wins 60% of the time, that means out of 100 trades, you will win 60 and lose 40. But here is the critical part. You have absolutely no way of knowing the sequence of those wins and losses. You could easily encounter a string of 10 losing trades in a row before the 60 winners show up. If you are emotionally attached to the outcome of each individual trade, those 10 losses will destroy your mind. You will abandon your system, start revenge trading, and blow your account. But if you think like a casino, you simply shrug off the losses as the necessary cost of doing business, knowing that your edge will play out over a large enough sample size. The 5 fundamental truths of the market. To help us hardwire this probabilistic mindset into our brains, Douglas outlines 5 fundamental truths about the market. These truths are the foundation of the zone. If you fully accept these truths at the core of your being, fear will simply vanish from your trading. Truth number 1. Anything can happen. You do not know who is sitting behind a screen in Tokyo, London, or New York, about to hit a massive buy or sell button. A single institution can step in and reverse a trend in seconds. Because anything can happen, you must always protect yourself with a stop loss. Truth number 2. You do not need to know what is going to happen next in order to make money. This completely destroys the illusion that trading is about prediction. You do not have a crystal ball. You do not need one. You just need an edge and the discipline to execute it. Truth number 3. There is a random distribution between wins and losses for any given set. of variables that define an edge. This goes back to the casino. Even if your setup looks perfect, it might be one of the 40% that fail. You accept the random outcome of the individual trade. Truth number 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. It is not a guarantee. It is just a slight tilt of the odds in your favor. Truth number 5. Every moment in the market is unique. This is the ultimate cure for the trauma we discussed earlier. Just because you lost money on a wedge pattern yesterday does not mean you will lose money on a wedge pattern today. The participants in the market right now are different than they were yesterday. The order flow is different. The volume is different. When you truly accept that every moment is a unique, independent event, your brain stops linking today's setup to yesterday's pain. You see the market clearly without the baggage of your past failures. The journey into the zone. When you combine absolute responsibility with a probabilistic mindset and an acceptance of the 5 fundamental truths, you arrive at the ultimate destination. You enter the zone. The zone is not some mystical trance. It is a state of mind characterized by a complete lack of fear, hesitation, or internal conflict. When you are in the zone, you are in a state of flow with the market. You are no longer trying to force the market to prove you right. You are simply observing the flow of information. When your edge appears, you execute the trade flawlessly, without a second thought. If the trade hits your stop loss, you feel absolutely no pain, because you already accepted the risk before you entered. And you know it is just one data point in a large series of probabilities. If the trade goes in your favor, you do not feel euphoric, because euphoria leads to arrogance and reckless behavior. You simply trail your stop, manage your risk, and extract what the market is willing to give you. Operating in the zone means you are trading in a carefree state of mind. You trust yourself entirely. You trust that no matter what the market does, you will act in your own best interest. You will not freeze, you will not move your stop loss, and you will not hesitate to take your profits. This self-trust is the ultimate holy grail of trading. It is not a magical indicator. It is a mind completely free from the crippling effects of fear and ego. The practical application and the 20-trade exercise. Mark Douglas does not just leave us with philosophical concepts. He provides a concrete blueprint for rewiring our brains. Reading a book is not enough to change your core beliefs. You have to experience the new belief system in action. To achieve this, he recommends a specific exercise. He challenges traders to define their edge with absolute, rigid precision. You must write down the exact variables that constitute a buy or sell signal. Then, you define your exact risk parameters and your exact profit targets. Once the rules are set, your task is to execute the next 20 trades that fit your criteria flawlessly, without a single deviation. For these 20 trades, you are not allowed to change your mind. You are not allowed to move your stop loss to break even just because you feel nervous. You are not allowed to take profits early just because you want to lock in a small win. Your only goal for these 20 trades is flawless execution. It is not about making money. It is about proving to yourself that you have the discipline to follow your own rules over a sample size large enough for your edge to play out. Douglas states that if you can successfully complete this 20-trade exercise without breaking your rules, you will experience a profound psychological shift. You will see firsthand that the random distribution of wins and losses is real. You will feel the freedom of detaching your ego from the individual trade. You will begin to build the unshakable self-trust that defines a professional trader, the endless pursuit of self-mastery. As we wrap up our journey through this monumental book, it is vital to remember that trading in the zone is not a destination you reach once and stay at forever. It is a daily practice. The market will constantly test your discipline. Your ego will always try to creep back in, whispering that you are smarter than the market, urging you to take just one trade without a stop-loss, or convincing you to double your position size, because this setup feels like a sure thing. When you feel those emotions rising, you must step back. Remind yourself of the casino. Remind yourself that you cannot predict the future. Remind yourself that every moment is unique. Trading is the ultimate mirror. It reflects all of your fears, your insecurities, and your flaws right back at you in the form of your account balance. But if you are willing to face those reflections, if you are willing to embrace responsibility and let go of the need to be right, trading can be the greatest catalyst for personal growth you will ever experience. Thank you so much for watching this deep dive into Mark Douglas and his life-changing philosophy. If you found value in this breakdown, please share it with a fellow trader who might be struggling with the psychological weight of the markets. Remember to define your edge, manage your risk, and always think in probabilities. I will see you in the next video.